Hi, everybody. March 26th, the market update desk with Scott Riley, NMLS 157524. Well, we're on the eve of the best holiday of the year. I'm excited. I'm really looking forward to tomorrow. What's tomorrow, you ask? Opening day of Major League Baseball. We'll be working from home tomorrow with the games in the background, reveling in a fantastic holiday. We're not worried about March Madness. We got opening day of Major League Baseball. So let's break down what's happening today here. Um, let's talk the ABCs of GDP, gross domestic product. What is it? What goes into it? Why is it relevant? So GDP is an important gauge on the economy, but where is it? What's it come from? And what's the formula? So what it is C, this is the algebra for everybody, C plus I plus G plus the sum of X minus M. Let's break out our pencils here. Senior analyst Mr. Gibson was giving me this today because he had his pencil ready and he wanted extra treats for his hard work. So the C is consumption, I is investment, G is government spending, and the sum of X minus M is exports minus imports. Now, consumption is consumer spending and makes up roughly 68% of the GDP, which is why the stats on the economy, on consumers specifically, their spending habits, their debt load, and those are very important to economic growth. We'll be getting, and the reason we're talking about this is tomorrow we get the final reading of Q4 GDP. Now, this is the third revision to it. Probably not going to be too much change of it. But we're also going to be getting the new GDP estimate for Q1 later today from the Atlanta Fed. Now, we expect there to be a rebound from, if you remember correctly, last week's was a reading of negative 1.8. And that's really because foreign trade in gold will be considered now and should account for roughly around 2% jump. That means GDP should be kind of flatline for Q1. Now, this is still very weak, but it's an improvement of a negative number that we were potentially looking at. And this is a big deal when we start to factor in the gold into the GDP because of the rise and increase that we've been seeing over the last 3 months in gold. Durable goods orders came out today. Now, those rose 0.9% in February. That, on its face or headline, was much stronger than the negative 1% that the market expected. But all of the spending came from one segment. What segment was that, you ask? Defense orders. The core reading, which strips out defense and aircraft orders, actually fell 0.3%, which was much weaker than the positive 0.2% that the market expected. Core shipments, which get plugged into GDP, jumped to 0.9%, which was much stronger than the 0.2, like we talked about. This is likely due to more shipments being done ahead of potential tariffs. In other words, what we've talked about, a pull forward of purchasing. Now, this is likely going to cause weaker numbers as we go forward. This component will also likely contribute to some higher GDP in Q1 than original estimates, just because of that pull forward mechanism that we're seeing. Mortgage applications. Purchases rose 1% last week and are up 7% year over year. That's a great sign. Refinances. Everybody goes, hey, I've got a low rate. Why would anybody refinance? 70% of the refinances right now, and we're doing a bunch of these, are cash out refinances to consolidate debt, get the blended rate on all of the consumer debt much more manageable, increase cash flow, because part of what we're looking at is helping clients understand their cash flow management so that they can increase cash flow, actually pay down their mortgage and all other debt quicker than if they never refinanced. So it's not the rate on your mortgage that's as important as your global or blended rate. Give us a call. We've got a calculator to help do that for you, and we can help open your eyes to see what savings you can have. Um, on the technical side, this is the third day in a row we're seeing the 10-year bond really fight and bounce against a top line of resistance at 4.33%. This is very important. It's battling between this and a Fibonacci level. And we do have a little bit of concern on this because if we see a breakthrough to the top side on the bonds, the next resistance level is at 4.425, it looks like. So that's what, about 9 basis points up. So that's a significant thing we've got to watch. Currently, the 10 year is at 4.342. Like I said, we're bouncing off that top line of resistance. So that's a breakdown for today. Give us a call, 616-293-2189. Like we said, we'll break down to see if a cash out refinance can save you a lot of money, help you pay things off faster. Also, we're seeing a lot of heat in the purchase market. We're getting a lot of calls getting pre-approved, pre-qualified, and getting offers submitted and accepted. Give us a call. We'll break down all the relevant information for you. Thanks so much, Scott Riley, the Market Update Desk, your original singular market news source for West Michigan.